Yeah, I think memes are increasingly fair play. Spending my time at more and more crypto conferences, I'm actually understanding like how many people hate this asset class. But in actuality, like the longer they trade, the more of a historical time series they have, the more palatable they are to quantitative traders and hedge funds, the more palatable they are to TA traders who look at support and resistance and things like that. And that those norms compound until they are like actual risk management tools to some degree.
Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Owns any of them?
Surely he owns a bit of some.
I own Jito, but
I'll
I'm
pull up the Blockworks financial disclosures form real quick.
Also, if you're in Blockworks, you have to own half of whatever Solana tokens there are, or else you go to jail. It's gonna be nice. All right, we are doing. What are we talking about? EigenLayer token launch, PyUSD, synthetics referendum is the topic notes that I have. Anything else, or can we get started?
I think it's good.
Ryan, Connor, anything that you specifically want to touch upon?
Did I added something or no? I didn't.
I think we're good.
Okay.
I will have to say, if we don't mute ourselves, and I'm saying this to everybody, not just a particular person, if we don't mute ourselves, Stefan gets quite upset. So just FYI. Just out in. Yeah? Okay.
Yeah, Brian. Yep.
Just
mute myself only when I'm not talking.
Yeah. Or the kids' daycare is going to be on the audio.
He just doesn't want to hear about me at all.
No, we definitely do. Forget how to do these.
No, it's always background New York noises.
That's my bad.
What's up, guys? Welcome back to another episode of 0x Research. I haven't been with Ryan. We got to mute, bud. There we go. I haven't been with you guys in nearly 2 months now, so it's very good to be back. I missed everything that is happening in the markets, so I'm going to call upon Mr. Danny to tell me what has been going up, what has been going down, and why this time is different.
Why this time is different? That's fun. As far as the markets in recent weeks, I think, Bitcoin and the general markets have seen some strength again. So obviously everyone in this space, their risk appetite has kind of come back in full force very quickly. You missed out on some hippos, some animals going crazy on the Solana blockchain. So I think we've just seen a very drastic change in sentiment from a month ago, where it was doom and gloom everywhere, and now it's we get some green candles on Bitcoin, and now everyone is very excited to ape into their favorite alts and memes again very quickly.
It's kind of crazy how quickly it shifts. I feel like it wasn't this, like memes have clearly become, it used to be maybe like, let's say Bitcoin goes up, Solana goes up, or like Ethereum goes up, Solana goes up, and then you'd get like alt L1s. And in the end, it would be Cosmos, and then everything would nuke. Now it feels like Bitcoin goes up, Ethereum does not go up, Solana goes up, and then every single meme that has ever existed goes up. And now we're getting old memes going up as well. Mr. Must Stop Murad has a 10 meme list that he's been flaunting around. I feel like that's definitely not going to end up very well, but I mean, at least it's just so difficult to talk about people like who are doing that, because on the one hand, I don't want to be like the boomer who's like, oh, meme coins aren't great, but also like there has to be a limit to how much you can talk. I think Murad's is fine, but I've seen other people catching flack. I don't want to name any names, but for shilling like actually really, really low market cap stuff. Curious how. I guess like I don't know what you guys' thoughts are on that. It's like, do you think that's fair play? And I know it's not like Blockworks Research, but what do you think? How do you approach that?
Yeah, I think memes are increasingly fair play. I can't say low cat memes are because such small amounts can really move meme coins, but or sorry, low cat meme coins. But yeah, so the thing about markets is that um, the longer they trade, like the more quantitative data you have, the more like trader myths you have, the more norms are established within markets. So memes are really cementing themselves as like these high beta plays if you want to get back into the market and like get some juice really quick, kind of like call options on some upside. So for all the folks that are really like fading the meme coin trend, and like now that I'm like spending my time at more and more crypto conferences, I'm actually understanding like how many people hate this asset class. But in actuality, like the longer they trade, the more of a historical time series they have, the more palatable they are to quantitative traders and hedge funds, the more palatable they are to TA traders who look at support and resistance and things like that. And that those norms compound until they are like actual risk management tools to some degree. Now, I'm not saying that like they're going to be in model portfolios or they're going to be a large part of like hedge fund strategies. But like just look at someone like Joe McCann. Like he decided to participate in meme coins. I assume through his fund more than just personally, but certainly he's been loud about it on Twitter, and other funds are going to see that, and they're competing with him for capital, and they want LP capital just as much as he does. So there's a lot of look, people want to say it's illegitimate. Every day that the volumes increase, it becomes less and less illegitimate. And yes, like these volumes are going to plummet 90% at some point in time, but like the market volumes generally are also going to plummet like 50 to 70%. So like that's going to be beta, and these things are going to live on, and who knows how big of a part of the market trading they'll be. But like I think the evidence suggests that it's more likely that the meme coin stuff is here to stay than it's ephemeral.
Yeah, I have two things on this. One is that I know anecdotally that funds are actually doing meme coin trades now. And I feel like that wasn't really a thing that I was hearing about a few months back. I'm sure there were others, but now it at least seems like they're more comfortable talking about it. The second thing is I feel like with memes, they've always been a thing, but this cycle they've just really obviously become like very, very clearly beta. And like very, how do I put this? They've become more normalized, um, which I think is fine. And that point you said about like if you're late to the market, you can just enter. At this point, I feel like it's become obviously I'm not a great trader, but not obviously. People don't know that. But um I found that it's actually been relatively not that difficult to just play again. Few months, at least during the bear, it was like a lot more difficult to pick memes. Even like 6, 8 months back, I mean, there were periods on Solana where you could just chuck like it was like every entry is forgiven and you can just make money. Um, Before the conflict between Iran and Israel, it was like the very recent one. It was like that again, where it was like you could just play around and somehow your entry would be forgiven and you would be blessed. I actually have something that I want to talk about, but Danny, I know you have a lot of thoughts, but I want to bring up PvP trade after this as well because it's something that is actually really. And I tried to get Ryan on it, and he did not want to get on it, but I think it's something that we got to talk about as well.
Yeah, I want to add one thought here. I saw some discussion. I mean, there's always discussion about memes, hating them, loving them. I saw Totally weigh in as well, and he kind of had this opinion that as we're seeing sort of like the tech centered tokens and plays become more rooted to like actual values and cash flows and what they can generate as businesses. Um, in his mind, it's like becoming a bit more of like this dichotomy of you can see these like businesses essentially or tech and utility focused like assets or protocols kind of become tied to like what they actually provide in value, whereas memes can like live on and continue to grow as like these just pure speculative plays. Versus in the past, it was like, if you're buying ETH or whatever the asset is, it's like you're paying some absurd markup on like virtually zero cash flow to the token. And you're hoping that like the mimetic power will fuel it to some valuation that you like.
One thing I will say is if memes are outperforming, and they are very clearly outperforming all other classes within crypto, how can you justify, like if you're a fund analyst and you've underperformed this entire cycle because you were mainly an ETH DeFi, or like even Solana DeFi hasn't done particularly well compared to memes. How do you even justify that? Like, because I think that's the main issue that a lot of people have, is that the same with builders. So they're building these protocols that are very clearly like focused on moving the space forward, and they don't get any love. And then it's the same with the fund guy who's doing all the cash flow analysis, who's actually like talking to teams, reading white papers, doing whatever he has to do to like get a little bit of alpha. And then in the end, either some random token launches on pump.fun and it makes a lot of people a lot of money, or it's like very cabal. I don't like the word cabal, but like obviously meme coins are an insider's game. Like nobody, like everybody knows this. And it's the same with most infrastructure tokens as well. So how do you justify that as a fund analyst and be like, you know what, like I'm underperforming just because I can't pick the right tokens? You're shaking your head.
They're not underperforming because their benchmark does not include meme coins.
That's fair.
Yeah, so the premise, I reject the premise.
Well,
Um,
except for the biggest meme, which is Bitcoin.
Yeah.
But
except
otherwise, yeah.
No,
for
but
the
like,
biggest
okay.
Bitcoin, yeah.
Then how about this? I don't know how often you have to go back to your LPs, but you have to go back to
There's
your
FOMO, right? Like that analyst can participate, and there is personal FOMO. But from a fund perspective, like these guys, these many funds are barred from it. Many funds like they benchmark against Bitcoin, the Bitwise 10, some mixture of Bitcoin and ETH. So actually, they're quite happy about ETH going down because they probably own something with a higher beta than ETH. Oh, maybe not. Maybe that they own some. Maybe they own a lot of ETH beta and they're down too. I don't know. But yeah, I don't think a lot of funds are seeing like there's not like direct FOMO versus their mandate for certain, but there is FOMO like versus other funds that are outperforming them because they're allowed to participate in bonk and like trade bonk. But
Yeah.
versus their benchmark, it's a different story.
Yeah. But I guess I didn't mean like versus your benchmark, but I meant like your LPs, you have to go back to them in a few years and say, hey guys, we made, I don't know, 60%. But like you can see these people who traded in-house money and they made 800% just because they bought Popcat, Mog, and Bonk at the right times. But you don't think that matters. You don't think anybody will be upset because they can
I,
be like,
I think
you
they
could have.
have this. They're coming from the same viewpoint, right?
Yeah.
Like those same LPs are probably like, if you had bet the house on Bonk and it had gone like, the backlash in the other direction would have been so much worse, right? I mean, obviously, it might depend on what your fund really looks like and who your LPs are. Maybe you have a degenerate fund, I guess, but I would imagine that like the benchmarks that these people are used to and like the things that they would be comfortable, putting large amounts of capital in, maybe at this point in time, maybe in a few years, if memes are 50 of the top 100 coins, that story might be different, but it is still like a relatively small part of the market. It's not quite so normalized yet.
Yeah, it will be, I think. We'll see. One other token that has been doing really well is Sui, and I still cannot find good Sui ecosystem tokens. Um, do you guys know any like I know Aftermath is supposed to be the next Keto. That's what we're all saying. We've all convinced ourselves that Aftermath is going to be the next Keto and the airdrop is going to save everybody's lives. But it, I feel like when we talk about Sui and Aptos, we mostly say, oh, like what's the marginal benefit that you get off another L1? But I want to kind of talk more about how do you see these guys actually build out an ecosystem and compete, not in the sense of like what are like is the tech better, is the language better, but more so like what approach do these guys need to take such that, for example, if you go on Aptos and you go on Econia, we just sent around this protocol like Kana protocol. You can last time I checked on Econia, you could trade 4 assets. That's just not good enough. And it's like Solana 2020, not even Solana always had you could do stuff. But on some of these chains that are funded crazily, Sui was giving out $200 million last year just for incentives, and they had like free protocols where you can swap between 4 assets. Like how do you approach that? What do you guys think is like the change that they need to do?
Get more assets on chain. I mean, I think if you look at Sol a year ago, year and a half ago, it's like it was the same. They kind of had the same problem at that time. There were lots of teams that were actively building, but there were very few tokens on the chain to trade other than just like Sol, maybe Bonk, um,
Yeah.
and maybe if a few DeFi projects from the prior cycles that had already released their tokens. This feels very similar. Like we're kind of these ecosystems are brand new, so there are some things that are out, but it's like very limited in scope at this point in time.
Are they brand new though? It's been 2 years now. And also, God bless the broken souls that bought the original Solana tokens that just underperformed Solana. I feel like that was like 2021. They at least had tokens. They went down, and it was all by the same guy who like developed 13 protocols or something. But at least there was stuff to buy and lose money on. On Sui, you can't even lose money because there's nothing to buy.
I'm becoming increasingly convinced that everything going forward is all business development from the foundations and labs or whoever is trying to make ecosystems happen. But like more specifically, it's like, and I think Danny, you're right. But more specifically, it's like getting qualified or legitimate asset issuers to put their token on the chain. Um, ETH and Solana have this to a lesser degree. Base and Arbitrum have this, where there are like legitimate projects who decided to launch their token natively on those chains. Um, when you when you think about what other ecosystems have done over the last, say, 6 years to get to jumpstart those ecosystems, I think of something like some ecosystems have done seemingly everything right, and results have been mixed to subpar. Um, if
I
you
don't want
think
to cut
of
off.
like,
Can you give an example? I just want to think of it with examples as well.
yeah, I can think of like look at like Polygon, for example. With like every meaningful enterprise partnership you could think of, like everyone was so jazzed on Polygon 24 months ago because they were crushing it on the BD front, but none of them were like asset issuers issuing tokens, like in a crude way to describe it, like tokens that people want to trade that they have confidence in. But like in like high contrast, like Solana focused on, like they got GeoNet to bridge their token over, and like people want to trade that token. Pith and Wormhole issued there. All these DePIN projects are issuing on Solana. You look at the Ethereum ecosystem, where like you can argue about the validity, the varying degrees of validity of these projects, but like every single LST issuer like is getting like meaningful like press, and they're issuing on ETH or whatever. So I think it's all a BD game, and that's really hard as an analyst to figure out. Like you have to have a boots on the ground approach. You got to get out of your spreadsheet and like talk to folks to figure out which of these changes is doing BD the best. So it's a different ball game.
Yeah, and it's also they kind of affect each other a lot. Like the more volume you get, the more people want to come on your chain because they want their tokens to trade volume. They want their tokens to get attention. So it's the same as like that's one of the. I don't want to talk too much about Solif, but that's one of the only things that actually worries me about Solif. Like I am relatively confident in Ethereum just because we've been having these chatters with Max Resnick and everybody else saying, like I feel like for something to die, I'm young, so I don't know how corporations die, but in my mind, for something to die, I feel like it needs to go the wrong way, and then nobody cares. Like nobody actually tries to affect change. And I feel like with ETH, we've been seeing a few EIPs that are one is to reduce block times recently, I saw, and one was to improve um, improve block size. And so that very clearly signals to me that people are actually care about Ethereum and they want to, like, they see that there's some erroneous ways and they want to fix it. My only worry is that, and Ryan, this is something you brought up, is that as a chain, you want people to issue assets on your chain. Like you want tokens to launch on your chain. And on Ethereum, it's just not like the last thing that I can think of that Ethereum beat Solana in is Nero, which I don't know if you guys remember. It's like and that I don't even think that was like natural. It was like very much affected by cabal dynamics and like insiders. So I can't remember the last time that somebody like went ahead. Not last time, but I feel like most tokens are launching on Solana now, which is the only thing that concerns me about Ethereum. It's not like the tech side, because I think they realize their ways and they're gonna fix it.
Same with everything else in Ethereum land. The tokens that launch in the EVM are on the L2s. Like you launch your liquidity on Arbitrum or Base, or pick your favorite L2. They don't launch on mainnet because it's not economical to do so for individuals to claim, pay the gas, swap, etc. So it's just the same problem as everything else. The activity is moving there, the tokens are moving over there, and then they're getting fragmented more because it's like you got to pick which L2 or which L2s plural to jumpstart your liquidity on.
Yeah, if you're an asset issuer, you're very confused about what's going on ETH. Like, do they want to accelerate this thing? Are they bringing DeFi back on chain? The bankless guys really want, like, they just tweeted out maybe 2 weeks ago, like, DeFi should live on the ETH L1. Vitalik said the opposite. He's like, I wish that there was no DeFi on the ETH L1. So you're very confused. That confusion needs to be cleared up for the market and these protocols to kind of get to figure out the direction of ETH and to see whether or not it makes sense to issue assets there. There's a ton of liquidity there. They just need to tell the market everything's going to be okay and unleash that liquidity.
Hey guys, what's up? I'm joined by Miguel, the co-founder and chief scientific officer at Nillion. Thanks for coming on, Miguel.
You're welcome.
So what is blind compute and why is it important for crypto and AI?
Well, we can encrypt data at rest and in transfer, but when we want to process it, you have to decrypt it first. Usually that's what happens in Web 2. And that's the mother of all problems, because then it means that the company running that service has to have access to your data. So blind computation solves for that problem. And it's a process where data is computed without revealing the actual data or the nodes to the nodes performing the computation. So it actually is able to compute while your data remains protected or encrypted. And I guess, well, it's important for crypto is because without privacy enhancing technologies, crypto makes everything public, right? So it's a problem for AI where all information is very sensitive. Think about the user prompts, the model weights, and the training data sets. So privacy or blind compute is actually the ingredient that is missing in the crypto AI mixture if you really want to make it secure.
Perfect. And how do you see privacy technologies keeping up with increasing complexity in AI?
That's a very good question. So privacy does add some complexity and slows things down, just like decentralization. But we're seeing some important changes in the market. Like, for example, models are becoming smaller. So you have all the Llama series of models that are very performant, and they're typically smaller than the equivalent. You have agentic flows. So agents are very interesting because they provide they benchmark, in the same rank more or less with simpler models, just because they're following these patterns where the model just questions about about the result and looks at it from different angles. So that's also a very interesting avenue. And then there's also this interesting avenue of binary and trinary networks where the model weights are just represented with bits or with three values. And that makes it easier then and more efficient to be implemented on top of a privacy-preserving layer. Plus, we think that AI is evolving towards more independence. You can think of it right now as an AI would be like a soldier, and you give it very low-level orders. But as it increases in intelligence, it will move towards a relationship with a general. So you just give some general high pattern, command, and then the general goes off and does its own thing. So that will place less stringent requirements on timing for the underlying crypto. And at the same time, that's when it becomes more sensitive, because the information you typically share with a general is way more sensitive than the one you exchange with a soldier.
That makes sense. And how is Nillion specifically approaching blind compute, and how will it adapt to increasing AI complexity?
So blind compute, we're building what we call the orchestration layer. The main idea is that there is no silver bullet in the privacy enhancing technologies world. There's different cryptographic protocols like ZKP and FHE and MPC, and even hardware-based cryptographic solutions like TEs. We're not prescriptive as to which solution is the best, because we really think there are different tools in a tool set, and it really depends on the problem that you're solving for. So we're building this orchestration layer that enables the different elements to coexist, and gives the developers the tools to actually combine them, so that they can best solve for any given problem or use case that they're interested in. And specifically about AI and the complexity, we're targeting a layer on top of privacy enhancing technology. So there's like a major gap of technology missing between privacy enhancing technologies and the applications, in this case AI. That gap has been filled traditionally in computer science with tons of technology, like binary trees, algorithms about sorting, algorithms about representation of problems as graphs, algorithms as greedy programming, linear programming. So there's like a ton of research that has been done over decades and decades of computer science that is kind of missing here. So we're specifically targeting for that gap in the AI vertical. And one thing that we've done is to innovate or pioneer the use of some techniques taken from image processing, which is a completely separate field from actually cryptography, specifically targeting something called the discrete wavelet transform, which is like a discrete cousin of the Fourier transform. It's called the DWT. And we've ported those techniques into PET, so we can run them on top of FHE, we can run them on top of MPC, and actually accelerate the bottlenecks that you typically found in AI. Those bottlenecks are mostly around the evaluation of nonlinear functions. That's the activations functions that you have, or the normalization layers. All of those are the really tough questions or problems to solve efficiently in AI when you run them on top of PETs. And these DWT techniques are actually accelerating those significantly by, as I said, taking techniques from another field and porting them into AI on top of PETs.
Fantastic. It sounds like you guys have some pretty big gaps to try and fill in, but I'm excited to see where this goes. Thank you so much for joining us. One token that did launch on Ethereum, EigenLayer, Eigen, which I think Mog just passed its market cap. I think either yesterday or the day before. And it's out, I think market cap wise, it's out of the top 100, which is kind of crazy to think about because it was touted as the next big thing for so long. It is number 114 market cap wise, FTB 6 bill, which is still obviously very hefty. But I think this is like not really about, it's a bit about appetite for DeFi and like infra stuff, but it's also a bit about, I think the team really botched that launch. Like, you made people wait 4 or 5 months. You didn't build anything during that time. Like, you had AVSs, but by that time people had already gotten shafted on LSD launches and AVSs that they were like, yeah, I don't care. And now it feels like it's a claim and dump instead. Did you guys look into, first of all, did you even unstake your stuff yet, or are you waiting?
Didn't participate. But EIGEN is or EIGEN, it is more like a top 20 token, I think, if you're going by FDV.
I am not going by FDV because that doesn't fit my bias.
Okay. Yeah, so the MOG stat was interesting, but it's still like probably a top 20 thing if you're going by FDV. And that's important for the folks to know because valuation definitely matters. There's a lot of people that expected multiples on capital buying Celestia from $10 to $20 at an absolutely absurd valuation. So the folks need to know that. As far as the EIGEN stuff, like, I think they're a consequence of like the expectations are just far too high. They were far too high from the beginning. Like, I don't think that there's like this cabal thing that like like does a narrative and like plans it, and then the market takes it and runs with it. I think it's a little bit more random.
Yeah.
But the market definitely took this narrative too far and really inflated expectations beyond what they were. Like if you were to take a very objective, if you were to do like a very objective description of what EIGEN was, I might not be 100% right here, but I think I'm directionally right. Like it's like it allows you to rehypothecate your stake and gain leverage on it, and like allows protocols to raise capital. And it's like not the second coming of security. And even if it was, it's like cash flows kind of matter. The market's valuing this thing on TVL right now. And like we found out a long time ago that TVL is not a valuation metric. Like it's a KPI, and it's like has varying degrees of utility depending on what you're looking at. But TVL is not the way to look at these things. Like BlackRock is not valued on its AUM. It's valued as its management fee on that AUM and the cash flows that it produces. So, um, yeah, there is some EIGEN controversy. But I think that, the controversy wouldn't be there if the market didn't have these like very inflated expectations of what it was capable of.
They also had that. They also had a wallet sell. Did you guys see that? And they were like, "Oh, somebody, they were, somebody impersonated somebody else, so they received these tokens and then they sold them." Which seems so ridiculous to me that like a team like EigenLayer can deal with these issues. To me, it seems fake because it seems so stupid. Like you should definitely triple check something like that. But
What actually happened there? What's the prevailing narrative there?
I'll look it up just to clarify so Shriram doesn't, well, he doesn't watch this, but if he did, he would probably get upset. But as far as I remember, it was that somebody impersonated somebody else, and got access to certain tokens that were supposed to be vesting, that was not supposed to be vesting. Something along the lines of somebody impersonated something, and then there was a mix-up, which is stupid. That should not have happened.
Yeah, classic bit of social engineering. I think the community kind of was outraged by the by the lack of the use of on-chain locks and vesting contracts. Just saying, hey, we're going to have some finance guy manage the funds and make sure that everything vests properly feels a bit silly when all of the like underlying chain infra and tech is built around tokens and how to manage them. So it does seem a bit silly that if you're going to launch at 6 billion plus FDV that you wouldn't just like have this handled by on-chain contracts. But yeah, I don't know.
Does it make you doubt the tech?
No, I don't think it makes me doubt like whatever Eigen, their DA solutions and what they're building. It's just more of like, I mean, it seems like a bit of a silly oversight when the tools are available to do this. They clearly have the dev talent as well, right?
When these like public mishaps happen, it actually becomes really interesting from like an entry perspective. Typically, if there's like bad press around a good thing, you like that's great as someone who needs an entry on a thing. So if you wanted to trade EIGEN and get that entry, like you hope that this news hits, but there's no margin of safety, right? So this is like one of those, like we still have a ways to go on margin of safety for this thing.
Buy the hack is my least favorite trade, by the way. It's like I feel like I don't know if it's you're not supposed to do it, I know, but it's like it's fun, but you always, like you said, you can always get a bit burnt.
Buy the hack has worked in TradFi very well. I Buy the hack, I don't know, maybe it's just because I'm closer to crypto now, but these things really like get some reputational damage from hacks. Losing user info in like losing an email list and addresses in TradFi is like very benign to actually losing capital directly in crypto. So I think that it's just much scarier here. So like when they do have those hacks, the reputational damage really lingers.
I think the timeframes are more impactful here. And you see this frequently, I think, as well with like smaller projects that get hacked. There may be a buying opportunity if someone gets access to like the mint function and then they run out of tokens to dump, and it can really like absolutely plummet a token's price, and that might open up an opportunity where it's like literally 1 cent on the dollar, and you would not get that opportunity in TradFi. But over the longer term, it's like if it comes back up to any kind of meaningful, relative valuation of its former self, it might just be the slow decline to nothing versus, I think in the TradFi case, we don't see so drastic extremes so quickly in most cases, unless a company is actually going bankrupt. So
I think the edge with most of these are also kind of gone. Like what you just said, Danny, where you track the wallet to see like when the hackers' sales are done. It's people just front run it. So the whatever return you got, the 40-50% is now like 15-20%. But with Eigen, I wanted to kind of bring up two other. I feel like restaking just hasn't done particularly well, and like a lot of people could have seen this coming, I guess. But like apart from talking about is the yield going to be good, like something that everybody was discussing 6 months ago, but just the execution has also just not been great. EigenLayer had this mishap. Apart from that, I think they botched the token launch. Like I think 4 months is way too long to wait to launch a token, to give somebody, like, to just tell people we'll do it in September, no vote, nothing. Karak is obviously struggling. People don't really talk about it. And Symbiotics Twitter has been hacked for 3-4 days. It's supposed to be like the second biggest restaking thing, trying to compete against EigenLayer. And to me, this is so ridiculous because you can't go on their website, because you're like, if I wanted to restake, or I can't. I'm not going to take that risk. Like their Twitter's hacked. I'm not even sure if their website's hacked. I'm relying on some Discord server, which often get hacked, or with their Telegram, which might also get hacked. So it's like nobody can use your product. What are you supposed to do? It's just like a ridiculous thing. I don't know. And like this should never have been an Ethereum narrative, I think. Restaking is just not a very sexy narrative. We could have come up with something better. But even let's say it is the Ethereum narrative, like it is whatever was touted for 2 years. Shriram is the golden boy of California. He's gonna save all of Ethereum. Nobody can use any of these things without either getting dumped on by some random guy who got an email because he like identified himself as an investor, or you just can't use any of these. I don't know. What do you guys think?
Yeah, I mean, yeah, it's a continuation of what we've said, right? Just like poor execution, like super inflated expectations. Um, I mean, look, it didn't make sense from the beginning, right? Like EigenLayer was like, oh, we're going to rehypothecate its security and launch all these new things because there's a shortage of security out there, and that's what everyone like really, really wants. They want to rehypothecate this ETH. It'll 1,000 flowers will bloom, whatever. Um, and I don't know. I think that the smart market participants were just like sitting there scratching their head, like, okay, this is pure rehypothecation. Like, why not just use other things than ETH? And EigenLayer raised like 160, 170 million based on that narrative. Symbiotic came out and raised 6 million and said, we'll let you rehypothecate anything. So I don't know. The narrative was like, it was very, very forced. And I think anyone who was being objective at the time saw that. And look, I mean, it was a tough time. I'll give folks the benefit of the doubt. Like this was like the emerging narrative out of the bear market. Like people were looking for hope, perhaps. Um, but look, I just think that the industry needs to focus on being less impressionable. These narratives, they're mostly nonsense. At the end of the day, like size up the fucking cash flows. Even like Celestia traded to like what, a $20 billion valuation. People were peddling this modular money narrative. It was nonsense for anyone looking out from the inside, or sorry, looking in from the outside. Was left scratching their head, understanding how little fees DA would generate versus that valuation did not make sense. I think that this will be a good cycle for for lack of a better term, like the education of the crypto space. We're shifting from this very like narrative trader driven environment to like this more valuation focused environment. I'm not saying that we're going to get there tomorrow, but it's incumbent upon the liquid market to participants to be less impressionable. Like it's all on you. Like look at these valuations, reason about them. Look at them versus TradFi comps, right? Like why is your Series A thing like raising at a $2 billion valuation when Series A SaaS products are raising at like 100 million to 400 million? Like there's a delta there that you need to seriously think about and adjust like your risk and margin of safety parameters accordingly.
I'm gonna make a counterpoint here, and if you are trading based on, like, you can buy and sell based on cash flow, it's very good. But if you're not, don't try and trade something that obviously has very little cash flows and it's just like very overinflated. And what I mean by this is, if you're gonna play the narrative or whatever the speculation game, do play with something that can't be valued. Like actually, Tau. You can't value Tau because there's no cash flows, nothing. It's just mumbo jumbo, AI mumbo jumbo. It's the Bitcoin of AI or whatever people say. But you know what I mean? Like, if you're gonna speculate and do something there, don't do it on like Celestia, which is making 30 grand a year on 20 bill value, like FTV. Do it on something that's you just can't value. Like, play the game, but play it seriously. Don't play it like on some 1000x multiple on some dog shit that people are gonna dump on you and I don't know. Like this NFA, not financial advice, but to me, that's why the L1 trade has always been super exciting and has been lucrative, because you can never like really do a proper cash flow model on it. Ryan will for sure try. He'll pull up his Excel and he'll run the numbers, but realistically, like compared to a GPU marketplace, Celestia, EigenLayer, you really can't value it as well as like you can't value it an L1 the same way that you can value these other things, which are very clearly businesses. Here comes angry Ryan.
Disagree.
No, but you have okay.
Disagree.
I'm gonna
You
pull
can, you
something
can
up.
you can value all of those things. I think the reason that the L1 trade worked for so long is because they probably should be in the billions if they generate any meaningful like activity. A $1 billion valuation does make sense. They are platforms, and platforms like accrue value massively, and they have like very strong network effects. So if you were look, there was a time in crypto where the platforms were very misvalued, right? Think of anything trading in 2019. Like I think Solana launched at a $200 million valuation, very reasonable by traditional financial standards, like maybe a little rich at the time, given like no one really knew what these crypto things would be, but like $200 million FDV, fantastic. Um, the market over the subsequent like 24 months like understood how powerful these platforms would be. um they began to understand that proof of stake accrues cash flows, and that like even if they didn't want to value them that way and they believed the money thing, like they could. um and now you're seeing kind of like an overcorrection there, right? Where, or sorry, like you're seeing like some corrective forces there where like the marginal platform is not getting the same valuation because the market just can't handle it. There's not enough fees to go around. So I think of something like Blast that's like really re-rated and didn't get the valuation of its peers. So you have this you have this classic hype cycle. But the market is understanding how to value these things. So it is very, very clear.
I do think if you look at something like TIA, it is kind of the perfect example of this, similar to L1s, where, uh, I think in this market, in crypto especially, you have participants and investors who, like, their mindset for the future is that, like, these networks will power, billions of users transacting on them. And so I think, people, they pull up a Celestia and they pontificate about what it can do, and their thinking is like, this thing is going to process like gigabytes and terabytes and petabytes of data availability and be worth so much. But then when you look at it today, it's like, the actual revenues and usage are nowhere near that. They're basically zero. And so then you end up in this game where you can play the valuation and it's basically nothing, or you fight over like the marketing team who's trying to angle this as like it can be so valuable because the asset will be used here and there. It's it's modular money. We've got all these meaningful things. We'll be able to issue assets on different chains, etc. I think you're just in this space. We've gone from like the full speculative angle to now it's like there's this kind of war being waged in between the Ryans of the world looking for real cash flows, and the people who are still clinging to the idea of like, no, but in 10 years it's like it's going to be decentralized NASDAQ, so I can value it up like on these future cash flows, right?
Okay, but even if the argument, I guess, is like this: if Solana onboards 1 billion people, it might actually go like 50x, like in terms of fees and everything. Like it might make sense. If Celestia onboards 1 billion people, it'll be at the FTV it's at right now because it makes no money. It has no. Do you know what I mean? It's like if you're going to tie your, I can't do English idioms, but you know what I mean? Like if you're gonna bet on a horse, bet on something that is like silly. Don't, and like that you can't really value. Don't bet on like the thing that's just never going to make sense. And yeah, that's really it. And Ryan, you know how you said you disagreed? This is the exact same response that Shriram would give. Do you see this? This is the funniest thing I've ever seen in my life. It's him arguing with Tolly, and then he says, "What? Sorry, it makes no sense." It's just so funny, but that's not very relevant. So you can't disagree with that point, right? That me saying if you're gonna do speculation that might actually lead to something. Don't do it on something that's already
Yeah,
3,000 PS.
yeah, you should exit one part of the market and go to the other part of the market where people are playing a completely different game. Like that exists in crypto. I think that's going to exist forever, given the permissionless nature. And like the like look, retail has a revealed preference for like not valuing things. They don't want to play the traditional financial game. They want to play the silly game, and that's totally cool. And that's going to exist forever. It existed in .com stocks. It existed on the internet forums of the .com bubble. It exists on crypto Twitter today, and there's always going to be a place in the market for that. So no doubt. How big is it going to be versus everything else? Like I don't know.
Danny,
But yeah,
pull up the
those
tulip
pockets.
bubble chart.
Both the what?
Tulip bubble chart. That's how we're valuing these things.
I do want to comment on one thing that Danny paid lip service to very quickly. It's the this asset will be used everywhere, like therefore it should have a higher valuation. Um, it's like, okay, what does that mean? When people say that, they're like, oh, like it's gonna be like when it's used for gas. I won't get into that. That's a can of worms. But then they're like, oh, like it'll be used in DeFi. Like it'll be a trading pair. It'll be like locked in smart contracts. Like, okay, Apple stock is the most probably used equity on the planet. Um, it is available to margin across every custodian in the United States. It's a very like relatively low vol, high cash flow earning equity. Like there's a ton of market cap there. If you are going to lever your stock portfolio, you effectively like make that Apple stock like TVL. And people try to like justify this like, okay, I can put ETH in a smart contract, therefore it should have valuation premium. Like everyone effectively puts Apple in a smart contract every day in TradFi to lever up their portfolio and to get margin. And there's no valuation premium. Like Apple's trading in a meaningful range throughout its life cycle. It does not look like pie in the sky valuation trading at like 500 times sales like ETH does. Or sorry, 200 times sales rather, 400 times sales depending on the look back period. So I don't know. It's one of these narratives that just like has to die. Like, oh, I can put in a smart contract, therefore it deserves a premium. Like, no, that dynamic exists in TradFi. There's no observable valuation premium for things that people use to effectively put in smart contracts.
Yeah, but there's no deflation. Let's pull up the ETH burn chart. There's no Apple burn chart, but no, but in
No,
like
there's a buyback yield.
Yeah,
There's
they
a
have
buyback.
buybacks.
Apple has a
no,
stock buyback.
yeah.
I don't know if
this
it's
is
net deflationary, but there are deflationary forces.
this is just a general like we're always kind of fighting equity versus currency. Like, is this claims on cash flow? Gary Gensler lock me up, or is it like is it going to be the next currency of the United States of America? Obviously not, but you know what I mean? And that's why I'm saying these things can be valued silly, because like you said, it makes no sense that it's cool that Ethereum can be used as a base pair. I'm not sure if it demands a huge valuation multiple just because of that, but it is like it feeds into this currency narrative. It feeds into this is like ultrasound money narrative. At one point, you want to be out of the ultrasound money because you might find out that it's not as ultrasound when liquidity dries up. But until then, I think it's a lot easier to. I guess this is like, I don't want to be the guy that clings on to the past speculation thing. But on the other hand, I also don't want to only trade cash flows or like buy into cash flows, because I think crypto offers a valuation multiple. I don't know if it if it necessitates it, but it does have it, and some things have it as opposed to some things like they just generally don't have it. Like actual very cash flowy businesses, harder to put valuation on, especially like that's why they went with the modular money narrative. Like Celestia was pushing that really hard, just because they were like, oh, I want like this to have the valuation multiple. It just didn't work out. So it's kind of a tough balance to find, I think. Like you don't want to midwit everything, and not to say cash flows are midwit, but you know what I mean? Like you don't want to be like, oh, this doesn't have any cash flows I can buy. Maybe not for Ethereum. Ethereum's not doing very well, but it's kind of a tough balance. Do you get what I'm trying to say? I did not say this well at all. Like
I think if you look at certain periods, it's and assets, it's like it's fair to discuss this point, because like if you look at the interest around GMX, for example, in those types of designs back in 23, like there was a lot of focus around like this real yield narrative, and there was, you know, like a cash flowing sort of business there, but it's like, you know, it because due to the nature of like how easy it is for competitors to spring up in this space, it's like you could have a very like nicely cash flowing business, but someone can copy your model and add a few features and like do a points program, and then all of your users move over there, and then they have the cash flow, and you lost it all, and then, you know, your valuation creators 10x. It's like it can these things can be chugging along and just suddenly get the bottom eaten out from them. And that can happen very quickly. Now, obviously, you can react to that, right? Like if you see the activity going down in real time, then, you know, your thesis can change about, you know, where the cash flows are going. But you know, so a lot of these things are somewhat tied together. Not that you know, not that if a valuation is tied to their cash flows that it's, you know, purely fueled by speculation, but the users and like the people that are using those applications and driving the valuation based on, you know, the fees and the metrics today, you know, they're speculating on like, well, what's the next app that I need to go use? And if they're going to decide to, you know, come off of GMX and go to some other, you know, perps location, then it's going to change things.
How long does a narrative trade last? 3 months?
I don't know. It
Maybe
depends.
6.
ETH has been going on for 8 years.
I don't know. Look at BTC. It launched in.
I don't know.
You brought up the base pair thing. I'm going to ask our data team to do, if they can do this, how easy it would be to spin up this analysis. I would imagine that ETH as a base asset in a trading pair has gone down in volume terms over time as USDC and USDT have become more prevalent on chain, certainly on sexes, but also on chain. I would bet that ETH is a very low percentage of pair trades, I guess you call it. I don't know. We'll get back to you next episode on that.
We can pull it up right now. I just need to find the Dune. Danny, can
that exists?
Danny, can you make some filler conversation while I look for this?
Yeah, so Tulip Mania was actually followed by several other cycles of flowers.
Well, I wanted to actually talk about this, which was willing prices into existence. Saw that in the notes. This is also like a part of narrative trading, which again, like a lot of people got burned on this cycle and past cycles. Like I think of Jito, I think of Tia, I think of like something like Or as these like 3 categories of willing prices into existence. Like a crowd gets behind a thing, or maybe even with like Fill the Wick. Remember, like ETH traded up to 4 or 2, and then it was like Fill the Wick. Like everyone was saying like Jito needs to be at $10. Everyone was saying that like T is going to hit 50. One or equals one BTC is like this rallying cry. How many historical instances of like these rallying cries, like narratives, have actually worked out for folks? I think you want to fade that every single time. Because why are people going to wait? If something's going to get to 100 and it's at 50 today, why are people going to wait until it gets to that number when they know everyone else is going to sell?
Yeah.
Because like that's the price target. Like they, I don't know. You see smart people kind of peddling these narratives, and it's a little disappointing.
No,
Yeah.
he's disappointed in me.
No,
That's what he's saying.
it's always a fade, and I think the most famous example that even normies will know is Doge to $1, and obviously it did not hit $1. It peaked out around 70 cents with the
But
SNL
it has to
appearance.
hit $1 this cycle for sure, guys. Doge to $1. It just makes sense. Ryan, I found the chart that you are interested in, and
Yep.
am I happy to say that I was right? This is just Arbitrum. Obviously the USDC WEF pair, the WEF pair, WEF. God, I've never said that out loud actually. It has the highest volume. I'll go through all of them, but
that's USDC.
yeah, but like if you see this, for example, on base, it's
They're
all
both USDC, or the highest pairs.
these are all ETH pairs. So like, I mean, I guess you can just ignore the first one, but the rest are. I mean, it's not the highest, but
The first one has more volume than the sum of everything below it. If you look at on base, it's a
yeah,
USDC pair. It has more than the sum of everything below it.
yeah. On Ethereum, it's even worse. If you see, it's one bill for USDC WETH, USDT WETH same, and the same for US. Like the second USDC ETH pool has triple the WBTC WE. Like the
Right. Yeah. So what I said was my
yeah.
intuition was.
So I'm not happy. I was wrong. I'm gonna kill myself.
I think the first
No.
one was more to your point. I don't think the volume disparity was that large on
Yeah.
Arbitrum, but maybe I didn't. You closed the page so quickly I couldn't see.
Well, because we found out that I was wrong, so I had to close the page as quickly as possible. Who would have guessed that the US dollar is more valuable to people than Ethereum, or like that it's worth more trading that than
Crypto has a revealed preference for dollars in every instance where people have had the choice to use ETH or BTC or dollars for payments and remittances and trading pairs. They've chosen crypto people have chosen ETH or have chosen USDC and USDT.
not just crypto people, all people ever who have ever existed, just except before where everybody was like, "Oh, we want gold." Now it's just very clearly we want the dollar.
I think there are very few people who are, making all their trades and denominating their portfolio value purely in ETH. I think it's, if I'm doing something in DeFi, sure, I might have ETH, and then maybe I want to restake my ETH, et cetera, and like earn that yield. But if it's the question of swapping for another asset or doing something else, trading in and out, then in my mind, we're thinking in US dollar terms. It's not how much am I trading in ETH.
It always feels so forced when you see people on the timeline and they're like, "Oh, like they treat ETH as money." I'm like, do you? I don't know. Do you? But it's always like obviously DeFi OGs and stuff. So I imagine they're just like goofing around a bit. I feel like this is the type of like right now is when people do denominate an ETH and Soldo. They're just like, oh, like I trade something. Let's say I buy Mudang, sell it. I'm going back into Solana. Or on ETH, whatever they're trading on ETH these days. You buy, sell, go back into ETH. But it's not the same as like what we're saying, where it's like you're not denominating, you're just trying to get to a certain ETH amount and Sol amount, and not like, oh, I have X Sol. That would be stupid.
I do think there are people, I mean, certainly during these like exciting bull market periods, you certainly see people who are, looking to increase their balance of like total ETH or total Sol, total BTC, pick your favorite asset in the space, and kind of hope to ride that thing up and trade other assets like sort of into it and grow that balance. But, I think ultimately in their mind as well, like when they want to cash out and go do things in the real world, they're looking at, USD or their local currencies so that they can buy a house, buy, real world assets, if you want to call them that, etc.
I will say one thing: if you're listening to this pod, I don't think you will. I hope that the listeners are not this type of person, but eventually, please don't fall for that. Like, I'm going to try and fall for the super cycle narrative and be like, oh, why would I denominate in fiat, man? Everything is BTC and ETH. Do not fall for it, because I don't know, do whatever you want. NFA, it's your life. Live your life as you want to. But I think that's a good place to end it. I've come off wrong 6 times in a row. I think that's a new record on the spot. Is there anything that you guys wanna say?
Go to permissionless.
Yeah.
Yeah.
Oh yeah, it's tomorrow. It might be a bit late now.
We'll talk fundamentals at permissionless.
You can
Glad
see the
Ryan-
ETH versus Sol debate. You can talk fundamentals with Ryan. You can see some fights happen.
Are they doing fights this year?
Yeah. It's is it David Hoffman or is it
Yeah, Bankless and guy from Synthetics, I think.
the other guy?
Oh, Kane.
Is it Kane? Yeah.
A guy from Synthetics.
I mean, that should be interesting, honestly. A little. It's like you're saying, Bach. People want to get silly on chain. People want to get silly at permissionless. So go see the fight. Go watch the ETH L2s or Solana, etc. debates. Get in on all the action.
I want to see Kyle Samani dunk on who's on that pod? Westy Capital. I want to see him dunk on Westy Capital. Ryan, what were you saying?
Crypto's PMF is online debating and now fights. Clearly.
And conferences.
And getting silly on chain.
Conferences and confrontation.
Conferences
Crypto's
and confrontation.
PMF.
Yeah, I think that's good.